Hey, good morning, everybody. This is Dan with Theta Trend. Today is Thursday. What day is it? February 19th, 2015. It's 4:52 a.m. here, Mountain Time. So we're about 2.5 hours or so before the markets open. They open at 7:30 Mountain Time. What we're going to do today is take a look at the RUT and talk about the RUT butterfly that's open for the March expiration. And then I opened a new trade also in the April expiration just yesterday. So we'll take a look at a picture of that risk graph as well. What I'd like to do is begin by taking a look at the daily chart of the RUT, which is what we're looking at here. And my March butterfly was started back here on 129 when price was trading around 1172. And the butterfly was centered just slightly below the money at 1160. So I opened this up and it was priced about 10 points below the current RUT price. And of course, my impeccable timing, the RUT moved higher, and we're now about 55 points or so higher than where we entered the trade. And I've had to adjust it, and it looks like we're getting really close up here to the 1230 level, which might trigger another adjustment. So the Russell closed at new all-time highs yesterday and at 1227, and we're just 3 points away now from the 1230 level. So trading up and through that's going to be another signal to adjust the trade higher. And what I've done here, these lines, this shows the adjustment point here, the one that I'm hovering over, and the lower point down here, 1155, this is the lower break even on my butterfly or so, approximately there. So this is kind of the window that I'm working with. And the Russell has come and it's just moved up, and we're kind of right up around the top again. So the next step is going to be to push the upside a little bit higher, move it back out to about 1240 or so, if that's possible, and see what we can do from there. I guess it is possible. So let's jump over and take a look at a shorter term time frame. What we're looking at here is a 90-day, 65-minute chart, and I've scaled it in, so we're actually not seeing the full 90 days. But this shows us the Russell 2000, and each bar is 65 minutes. So what we saw yesterday is we saw the Russell sell off a little bit in the morning, and it came down here, and it initially found some support here, and this is around the previous high. So if you remember, let's just zoom out here a little bit. The market was trading in a range. It was trading in a relatively big range, and this was the previous all-time high here, right up around 1220 or so. And what happened is we nudged out above that high last week, and yesterday we sold off, came back down, tested that level yesterday, and pushed up higher to a new high. So we found support at prior resistance, and we moved higher. If we were to break down below this 1220 level or so, I could see us coming down. 1215 is the first obvious area. What I've done here is I've illustrated that there's a gap, and we haven't filled this gap, but that doesn't mean we're coming down to fill it anytime soon. I'm just aware that it exists. And again, there's another gap down here around the 1175 to 1180. One thing I did notice that's worth sharing is if we find Fibonacci retracement off of this thing, and I don't usually do all of this Fibonacci stuff because it's sort of, to me, seems a little bit cheesy, but it does seem to be self-fulfilling as well. If we were to drop this Fibonacci from the previous low up to our swing high here, this gap, filling this gap, would sort of correspond with the 38.2% retracement level. So that's a reasonable pullback. And we could certainly come back into there, test this level, find support around 1200, and then move higher. But for the time being, we're up above new all-time highs, and there's no reason to think that that's going to happen, but it certainly could. So now that we know that level, let's go hop over to the risk graph and take a look at the position. Excuse me. So what we're looking at here is a picture of the March position as it exists. And what I have is I have a butterfly centered around 1180. It's a 50-point wide butterfly. And I have another one around 1200, which is also a 50-point wide butterfly. I then own a couple of calls here in March, the 117 and the 120. And I bought those initially because there's so much skew in the trades that I don't like the Russell to move up and then cause me a great deal of pain. So the bars here on this chart, 1227.89, this is where the RUT closed yesterday. So we closed just a tiny bit outside of the expiration break even, and 1230 is the next adjustment point. And as you can see here, even at the 1227, we're short some delta, but we're still positive theta. And in order to come into the money on the T plus 0 line, we need to move down to about 1216.24, and that's today. So if we come back over here and we take a look at that and say, how bearish are we really? 1216 is kind of this level of prior resistance that could potentially become support. I guess it became a little bit of support right here. But so we're bearish, but we're not super bearish in here. So that's good. Let's hop back over. One of the things that I'm trying to do here is, as the Russell moves higher, all I'm really trying to do is move this expiration graph up with the market. So as the market moves up, I want to move the graph up, and I don't want to lose too much money in the process, obviously. Right now, the trade is down about $125 or so, and if we hit this adjustment point, we're looking at being down about $150, and that's okay. So the goal here is to pull out about 10% of capital, and right now the trade has over 3,000 of capital in it, so somewhere in the neighborhood of 300, 350, something like that is what we're trying to pull out of the trade. And that's similar to the amount I'm willing to lose on it as well. So I have a little ways to go on the upside here before that even becomes a factor, about 1245. So we'd have to have a big gap up open. But one of the things I'm looking at to adjust here, the trade I'm considering adding to the position to adjust, is a butterfly around 1220, but this is a slightly unbalanced butterfly. So it's the 1220, 1260, that's 40 points, and then the 1170 on the downside, so that's 50 points. So if we add this unbalanced butterfly, what we see is this is where we are right now. We're at the 1227. All of a sudden, we knock our expiration graph out to about 1240. It just gives us a little bit more room to run. And we're still preserving the position and just kind of buying ourselves some time in the trade. I think the Russell could pull back a little bit. This level down here, the 1170, 1180, 1190, this seems less likely right now because we're up at all-time highs, but it can certainly happen. If you jump back over the daily chart, the Russell sort of has this history of making highs and then crashing back down here. And that's not to say that it will happen here, but it is just to point out that it could happen. So that's the sort of thing that would benefit this trade. But this is the adjustment that I'm likely to make if we get a push up above that 1230 level, is we'll probably add this 1220, 1260, 1170 butterfly. And the other thing that does is it takes a little bit less risk on the upside, but it does push out this expiration break even. We have right now 28 days left in this trade, so we're getting close, and the T plus 0 line will start ticking up pretty quickly. I mean, that's 3 days forward, so all of a sudden, if we make this adjustment, we go a few days forward, we're coming into the money already, and that's just because the trade's getting so close to expiration. So let's bring this back to today. For some reason, my thinkorswim is not unclicking that position. That's okay. This is a good segue. We can just go into the April butterfly. We were essentially done with March. So yesterday, I opened a new April butterfly in the RUT, and I bought a long call. So I bought a 125 IWM call to hedge the upside in the April butterfly. The April butterfly is centered at 1210, and this was opened, probably RUT was about 10 or so points higher than that. It was somewhere in the neighborhood of 1220, we could call it, maybe even slightly higher than that. And this is what the position looks like as of today. So it has a small open profit right now, $17, and there's really nothing to do. Everything looks good. If we get a move down, we're fine. If we get a move up, we're pretty fine. And it's not until we get above a little bit above 1250 that I'll start thinking about adding to the position and adjusting on the upside. But for now, I'm just going to let this sit here. I will note that I opened this up a little bit earlier than I normally do. So I opened this up with, I think there were 58 days on the day that I opened it. And the reason I opened it a little bit earlier than normal is just that I was watching the Russell come up here. It was making these new all-time highs. And, I mentally have a hard time not selling short when things are making new all-time highs. And so rather than just outright selling short, I'm putting on a slightly bearish position. And then I'm hedging the upside because I'm not sure once we've traveled this distance from 1160 up to about 1220 that we're really going to be continuing higher another 50 points, another 70 points, something like that. So I'm willing to take a slightly more bearish stance. And again, that butterfly was centered at 1210 and down to 1160. So this is also going to be close to my downside adjustment point in that butterfly, but on the upside I have quite a bit more. At any rate, those are the butterfly positions I have open today. If you have any questions, please shoot me an email, info@thetatrend.com. Thanks for watching, and I hope you have a great day.